Wolfsberg Group. The Wolfsberg Group shot to prominence in October 2000 with the release of a well-publicized set of global AML guidelines for the private banking sector. The rationale for the initiative, which followed a series of scandals involving high-net-worth individuals and PEPs, was the avoidance of further money laundering within the private banking sector. The initiative was launched with the cooperation and assistance of Transparency International. The Wolfsberg Group comprises various private banking institutions. The Wolfsberg Group has no official status and its standards are not binding, even on its members. But its statements of good practice have received international recognition throughout the financial sector, indeed, to the point of being used by regulators to benchmark good and poor practice. The standards consist of the various sets of AML and KYC principles issued by the group since its inception, which are considered as best practices and measures to be adopted by the organizations such as financial institutions. The Wolfsberg Group announced Correspondent Banking Due Diligence Questionnaire, CBDDQ, which aims to set an enhanced and reasonable standard for cross-border and/or other higher-risk correspondent banking due diligence, reducing to a minimum any additional data requirement, as per the Wolfsberg definition and current FATF guidance. It is also the group's expectation that the group members will begin to use the CBDDQ in a phased approach with all of their respondents. The Wolfsberg Group believes that a reasonable risk-based approach adopted by the organizations to assess the ML risks, including the country risk, customer risk, and services risk, results in the implementation of the relevant compliance controls to effectively manage ML risks. Further, organizations are required to design and implement appropriate AML measures to mitigate the potential ML risks associated with high-risk category customers, such as politically exposed persons, PEPs. Wolfsberg Group emphasizes the importance of enhanced due diligence in cases of high-risk scenarios and customers. The continuous threat of money laundering is most effectively managed by understanding the potential and emerging ML risks, which are associated with the customers and the products which an organization deals with. Determining how ML risks are mitigated by the organization's KYC and CDD program, undertaking an enterprise-wide AML compliance risk assessment may be a complex task, but a necessary one to understand an organization's compliance culture. The periodicity of the compliance risk assessment depends upon several factors, including the methodology employed, the type and extent of interim, validation, verification that is undertaken, the results of the risk assessment, as well as internal or external risk events. An appropriate assessment of ML risks results in the application of appropriate due diligence when entering into a business relationship with the prospective customer. The goal of Wolfsberg is to assist the organizations in managing the ML risks and to endeavor to prevent the use of a financial system of the organization by criminals. The Wolfsberg emphasis is also on the money laundering risk assessment to improve financial crime risk management through identifying the general and specific money laundering risks an organization face.